Hey everyone, let's talk about trading. Does that word just make your head spin a little? Perfect, because today we are going to break it all down. Seriously, by the end of this, you'll have a complete map to the entire world of trading, starting from scratch.
Okay, so let's kick things off with a weird question. What on earth does buying a tomato at the grocery store have in common with trading, say, millions of dollars in currencies on the global market? You might think, nothing, right? Well, the answer is actually pretty much everything.
And that right there, that's the key. Before we get into all the fancy stuff like charts and markets, I want you to get this one simple idea. Trading, it's something you're already doing, like every single day.
Seriously, let's just push all the jargon, all the complicated-looking charts, push it all aside for a minute. When you boil it all down, trading is simply this: buying and selling. That's it. That's the foundation we're going to build everything on.
I mean, think about it, right? You go to the store, you buy a tomato. The store owner sells it to you. It's a basic exchange. All financial trading is taking that exact same concept and just scaling it way, way up. So instead of a tomato, you're trading a financial asset. But the principle, it's exactly the same. You're a buyer, and somewhere out there, there's a seller.
Okay, so if we're not trading tomatoes, then what are we trading? That's a great question, and it brings us to the first big piece of our map, the what. The actual stuff, the assets that are getting bought and sold.
It pretty much boils down to four main groups. First, you've got your securities. Think stocks in a company or bonds. Then there are currencies. The US dollar, the euro, that's all traded on the Forex market. Third, we have commodities. This is actual physical stuff like gold or oil. And finally, the new kid on the block, cryptocurrencies like Bitcoin and Ethereum.
Now, speaking of crypto, there's a really important warning we need to talk about. Because the prices can just go absolutely wild, super volatile, a lot of people see crypto as a better fit for long-term investing, not so much for short-term trading. For a beginner, jumping into that kind of volatility, it can be a total minefield.
All right, so now we know what's being traded. The next obvious question is, where is all this happening? And that, my friends, is the where on our map, the actual financial markets.
And really, there are 5 main places where all the action goes down. You've got the stock markets, which everyone's heard of. Then there's the Forex market for currencies, which is just unbelievably massive. You also have more specialized markets for things like futures and commodities. And of course, there are all the new digital exchanges for crypto.
Okay, and this next point is huge. You have to understand the difference here. On one side, you have legitimate, regulated markets where real trading happens. But on the other side, you've got these platforms that pretend to be for trading. You might see things called color trading or binary options. I need to be crystal clear about this. That is not trading. It's just straight up gambling, and the odds are completely stacked against you from the start.
Okay, so we've got the what and the where figured out. Now let's talk about the how. This part of our map is all about time, specifically how long a trader actually holds on to what they bought.
This timeline is a perfect way to see the different styles. So, way down on the super short end, you've got something called scalping. We're talking trades that last just a few minutes. A little longer is intraday trading, or day trading, where you buy and sell all on the same day. Then you've got swing trading, holding for a few days, maybe a few weeks. Longer than that is position trading, which can go on for months. And finally, if you're holding for years and years, well, that's what we usually just call investing.
So even though all these styles exist, when people talk about being an active trader, they're almost always talking about one of these 3: scalping, intraday, or swing trading. That's really the world of short-term, frequent action in the markets.
And that brings us to our last, and maybe the most important piece of the map, the why. Why does a trader decide to click buy or sell at any given moment? Well, it really boils down to 2 main ways of thinking, 2 methods of analysis. So on one side, you've got what's called fundamental analysis. Think of this like being a detective. You're digging into economic reports, news headlines, the health of a company, all to figure out what an asset is really worth. Then, on the complete other side, you have technical analysis. These guys basically ignore all that news and focus only on the price chart itself. They believe every clue you need is hidden right there in the patterns of the chart.
So which one do most active traders actually use? The answer might really surprise you. The split is pretty staggering. It's something like 92% of their focus goes to technical analysis. For most traders, the real story isn't in the headlines. It's written right there on the price chart.
And there you have it. Just like that, you have a complete map to the entire world of trading. We talked about the what, the different things you can trade, the where, the legitimate markets to trade them in, the how,
the different styles based on time, and the why, the two main ways traders make their decisions.
So now you've got the map. You know the lay of the land. The only question left is the fun one. Where are you going to start exploring first?